Namaste, good morning, friends. We start with the administrative provisions. Okay, of trust. We start with administrative provisions of charitable trust. The administrative provisions of charitable trust. The first thing to understand is how does this charitable trust get the exemption? Section 12AA. Okay, grant of registration. Okay, grant of registration is spoken in section 12AA, and this section tells how, that is, wherever we see in the charitable trust registered under section 12AA, registered. Okay, so this is the section which speaks about grant of registration. When you read the BAR law, you will also find a section called 12A/12AA. When you read the BAR law, you will, because till 2007 it was 12A which was the guiding section. So now 12AA is the guiding section. So this goes off, but those entities which are registered under 12A continues. So that's why you will say, you will see in the law 12A/12AA. But now this is the dynamic section, and when I say this is the dynamic section for my November friends. Okay. So grant of registration. A trust is to apply for registration, and only on grant of registration section 11 is applicable. That is, unless you are a registered trust, your income is not exempt. Unless you are a registered trust. An unregistered trust, even if it is going to be for public welfare, even it has spent 95% of its income, still it will not get, in fact, it will be taxable as AOP. Okay, practically speaking, we'll call it, we'll tax it at AOP, treating it as AOP. So, a trust is to apply for registration, and only for on grant of registration section 11 will become applicable. Otherwise exemption provisions are not applicable. Right. My dear friends, what is the other thing with regard to, because when I need to apply, okay, application for registration can be made anytime after the incorporation of the trust. Previous, as I told you, there was a section 12 which was dynamic. Okay, there it is, it has been said application has to be made within 1 year from incorporation. Now that provision is gone. Now that provision is gone. You need not write it. I'm just giving you a hint. Okay. Now the provision is gone. You can apply at any time. Application needs to be made to CIT/PCIT, Commissioner of Income Tax or Principal Commissioner of Income Tax. Application needs to be made to either Commissioner of Income Tax or Principal Commissioner of Income Tax. Application needs to be made to either the Commissioner of Income Tax or Principal Commissioner of Income Tax. To them only we will be applying. To them only we will be applying. After receipt of application, the Commissioner can call for such documents and information pertaining to the trust. So this is known as the process of registration. After presenting the application, the commissioner will ask you to present all the documents and information, not only the trust deed, whatever the bank accounts, etc. Okay, needs pertaining to the trust. Application needs to be made along with the trust deed and audited financial statements. Okay, so you need to present your existing financial statements, the trust deed and all other information you have collected for. Okay, and this can be called for by the commissioner also. If the commissioner is satisfied with the genuineness of the trust, if the commissioner is satisfied with the genuineness of the trust, then he shall grant registration by passing an order. Okay, then he can grant registration by passing an order. If the commissioner is satisfied with the genuineness of the trust, then he shall grant registration by passing an order. Commissioner shall also verify the compliance with other applicable laws. This is, my dear friends, a Finance Act 2019 amendment. Okay, one of the very progressive amendments I would call. Not only the commissioner will be liable to look into the compliance with regard to income tax law, the commissioner is also supposed to verify with the compliance of other applicable laws. It can be Trust Act, it can be foreign contribution. That is where the law is coming to. That's what I am personally feeling, because right from this government takeover, they are very worried about this foreign contributions to through or coming into the trust. You know that there are 5 or 6 trusts which are already banned by the government. So FCRA, it can be okay. So the grant of registration can also be stopped, or you can say no if the trust has not complied with other laws. Not only income tax law, the other laws are also now going to come into picture. The other laws are also going to come into picture. So commissioner shall also verify the compliance with other laws. Commissioner has to pass an order either accepting the registration or denying registration within 6 months from the end of the month in which application is made. Commissioner has to pass an order either accepting the registration or saying rejecting the registration, or rejecting the registration, denying registration within 6 months from the end of the month in which application is made. From the end of the month. So I am making an application. Let us take today, 12th August 2020. I am making an application. So leave August, September, October, November, December, Jan, Feb. Before Feb 28th, 2021. Okay, either accept or reject. Okay. Suppose within 6 months the commissioner has not communicated. Within 6 months the commissioner has not communicated. The law says that the trust is deemed to have been registered. The Supreme Court has given in the Society for Promotion of Education. Okay, the Supreme Court has given an outright promise. Okay, yeah, Society for Promotion of Education. Okay, okay, which is upheld by the Supreme Court. Okay, that where the communication is not received within 6 months, assessee can deem it to be registered. I'll come to the case laws, don't worry. Okay, so within 6 months you should communicate. Beyond 6 months, you don't have the right to communicate rejection. That's what we have seen in contract law itself. I told you, for all things, the parent legislation, if we are strong in contract law, we will be able to understand a lot of things. Okay, so commissioner has to pass an order either accepting or denying the registration within 6 months from the end of the month in which application is made. Where commissioner is rejecting the application, then opportunity has to be given to the assessee to be heard. Okay, we will talk about this in assessment procedure. I have a very detailed discussion about this. Okay, so as of now, you cannot listen to the assessee. You cannot reject it without listening to the assessee. Okay, you have to give, everywhere law is, give him a chance to say anything. You are rejecting for a reason, give him a chance to defend that. So opportunity has to be given. When can registration be cancelled or revoked? When is the circumstance, or what are all the circumstances under which registration that is granted by the commissioner can be cancelled or revoked? Where the money is not spent for public purposes. Okay, where the money is not spent for public purposes, that is for the object of the trust. Where the money is not spent for the object of the trust, then the registration that is granted can be cancelled by the commissioner. Where the money is not spent for the public purposes is the wordings they use, but it technically means it is not used for the object of the trust. Where the trust violates provisions of this law or any other law. Again, they have particularly brought this up. Okay, not only violation of income tax law, violation of any other law is also not acceptable. Where the trust is spending money on any particular caste or religion. Okay, so you can understand this provision. But of course, scheduled caste, scheduled tribes, it's acceptable. Okay, even this is acceptable, but it depends upon the object. I told you a section of the public is also general public. If it is a religious trust, it is different. If it is a general, if you are registered at as relief for poor, and you are spending for a particular caste or religion, then the commissioner has the power to revoke or cancel the application. Okay, where it becomes a private trust, where the funds are spent for a particular person, like trustees, okay, relatives of such trustees, etc. Where the activities are not carried on in a genuine nature, where the activities are not carried on in a genuine nature. Okay, these are more like a English terminology, business terminology, and not defined by the law. Where the activities are not carried on in a genuine nature, we know that money laundering is happening a lot. Okay, so in that case the registration can be cancelled. Okay, friends of me, this whole section is now stands replaced. This whole section is now standing replaced by a new section called section 12AB, which overrides both the 12A and 12AA. 12AB has been brought into law. Okay, 12AB has been brought into law. Okay, from financial year from financial year 2021. Technically, the date announced was 1st June 2020. Now it is standing to extend. It has got extended. Okay, from financial year 12 to, okay, section 12AB replaces 12AA and 12A. Okay, section 12AB, registration formalities are moved to section 12AB instead of section 12AA and 12A, which it has been overridden. That technically now the law has now said all trusts registered already under 12A also come back and register with me. They want, because here registration once granted, till it is revoked, it is going to continue. But under the new law, it is not so. But under the new law, it is not so. For the friends of our next year, I mean May examination, we just look into it quickly once. Okay. So you can see the amendment in 12AA. You can see the amendment in section 12AA. The following shall be inserted with effect from 1st June. Nothing contained under this section shall apply on or after 1st June 2020. So this section is over with this date. Okay, this section is over with this date, but even the law will later, I'll tell you a provision. Nama application, we would have made it in April under 12AA. They are going to take it under 12AB. So technically, you can take it that for the financial year itself, it's not going to be applicable. Let's see the extensions. The extensions might not be a question, but I'll give you the extended dates also if needed. After section 12AA of the Act, the following section shall be incorporated with effect from 1st June. Okay, the PCIT or CIT on receipt of an application, okay, shall, where the application is made under clause 1 of the said clause, pass an order in writing registering the trust or institution for a period of 5 years. The first major change in 12AB is, okay, registration is for a period of 5 years. In other words, every 5th year, registration needs to be renewed. It's a big task. I don't know how they are going to do. Previously was also there in the law. It is not that it is new, but it is a very big task to do this. Okay, right. Where the application is made under any of these clause, what can commissioner do? The same thing continue. Call for such document or information. I hope it's visible for our friends. The same thing. Call for such documents or information from the trust or institution in the 1023 CU, same provision. Make such enquiry as he thinks fit in order to satisfy himself about the genuineness of the activities of the trust or the institution, the compliance of requirement with any other law for the time being in force of the trust or institution as or material for the purpose of objective. Okay, the same continues. What on receipt of application, what should be done is the same. That is, look for the genuineness. Genuineness is not explained in new law also. I mean the newly incorporated section, and look for compliance of any other law. After satisfying himself with about the object of the trust or institution and genuineness of the activity and compliance of the other law, pass an order in writing registering the trust or institution for a period of 5 years, or if he is not satisfied, that is the commissioner is not satisfied, pass an order in writing rejecting such application and also cancelling registration after affording an opportunity of being heard. Same provision continues. Okay. Now the new law also gives what is a very nice measure, which is provisional registration, where the application is made under clause 6 of the said clause, pass an order writing provisionally registering the trust or institution for a period of 3 years from the assessment year from which the registration is sought. So the new law has brought, okay, provisional registration, which is new, okay, which is new, which can be the question also. Provisional, okay, where the CIT or PCIT is satisfied with the genuineness and compliance with all other laws, then he shall grant a provisional registration for the trust, which will be valid for a period of 3 years. Which will be valid for a period of 3 years. Which will be valid for the period of 3 years, my dear friends. Sorry. shall send a copy of the order to the trustee. All application pending before the principal commissioner or CTIT on which no order under this section 12AA before the date on which this section comes into place shall be deemed to be an application. Okay, so I will move it from 12AA to my section. Okay, the new section, which is always the reason. The order under clause A of subsection 2 of clause B of subsection shall be passed in such manner and form and manner as may be prescribed before the expiry of 3 months, 6 months and 1 month respectively, calculated from the end of the month. Okay, that is that for the trust it remains to be 6 months. There are some scientific research institutions and other things which are merged with this section. That's where they say 3 months and 1 month. Don't worry, for the trust it remains to be 6 months. For the trust it remains to be 6 months. There are some other institutions I will show you. Where registration of a trust or institution has been granted and subsequently the principal commissioner is satisfied that the activities of the trust or institution are not genuine or not carried out in accordance with the object of the trust or institution, as the case may be, shall pass an order in writing cancelling the registration of such trust or institution after affording reasonable opportunity, without prejudice to the provisions of section 4. This is section 4, where registration of a trust or institution has been granted and subsequently it is noticed that the activities of the trust are being carried out in a manner that the provisions of section 1011 do not apply to exclude either wholly or partly their income of such trust or institution due to the operation of section 13. That is, where you are applying the funds for the founder of the trust, where you are not spending for public purposes. Okay, the trust or institution has not complied with the requirement of any other law. Okay, or as referred to in clause B of the direction or degree of whatever name called respective law, especially FCRA, holding that such non-compliance has occurred has either not been disputed or attained finality, then the principal commissioner or the commissioner may, by any order in writing, after affording a reasonable opportunity of being heard, cancel the registration of the trust or institution. Repeating what this provision says, apart from whatever is said in 4. Okay, I will cancel the registration when you are not in compliance with section 13. You can see, we have seen what are all the reasons for compliance. When the money is not spent for public purposes, when it violates any other law is there in clause B, when the trust is spending money for a particular caste or religion, when it is spending money for a particular person, when it is not genuine. Is what it is said. The activities of the trust or institutions are being carried out in a manner that the provisions of section 11 and 12 do not apply to exclude either wholly or only any part of the income of such trust due to the operation of section 13, or the trust or institution is not complying with any other law for which it is applied. So these are all the reasons. Here they spoke about genuineness, okay, not genuine. Here they speak about not being applied for the object of the trust. Here not being complying with other law, then they can cancel registration. So 12AB replaces section 12AA. 12AB replaces section 12AA. Number one section replacing another section. So all the provisions of the previous section will also be rewritten. உங்களுக்கு பார்க்கும்போது பெரிய அமெண்ட்மெண்டா தெரியும். But if you look at it genuinely, there are that registration period is the new thing that has been brought around, and the compliance with other law is brought around in 2019 itself, which is more indicated in the section 12AB, which as I told you is of very genuine nature. Okay, the same wordings will appear in section 1023C also. Section 2023 for the first the following provisions from the first day of 2020. Okay, so make an application. Here is what that 1 month, 6 months and all I told you comes. Provide the extension of fund or institution, university or educational institution or hospital or other medical referred to shall not be available unless the trust or institution or university or other educational institution or hospital or makes an application in the prescribed manner to the principal commissioner for grant of registration, etc. Okay, so here is where all this I'll come to that. Now I'm going to come to that. Okay, where the application is made, pass an order in granting. Okay, same thing, same genuineness of the clause, same things are replaced for a period of 5 years. Okay, same things are replaced in section 1023C also. Same things are replaced in section 1023C also. And then it goes to 23D and all. Same provisions in 23C also. So this is the new section that has come into place. Okay, I'm still in the new provisions. I'm still in the new provisions. With a, there is now when you need to reapply is also there, because all the existing trust is also going to come under 12AB. They want to scrap the old section and bring everything under 12AB. Okay, 1 minute. Okay, this is brought around in 12A. The following clause shall be incorporated with effect from 1st June 2020. This is where you will get that clarity. Notwithstanding anything contained in the previous section, the person in receipt of income has made an application in the prescribed manner to the principal commissioner or commissioner for registration of the trust. Okay, where the trust or institution is registered under 12A as it stood before, I told you 2007 varaikun 12A, or under 12AA, that is up to 2020. Up to 2020, 12AA. 12A is the previous one, 12AA is the new one. Within 3 months from the date of on which this clause come into force. Okay, here is what I told you that three. Okay, within 3 months you have to now apply for re-registration under section 12AB. In the time it stands extended. This time limit has stood extended, don't worry, but all trust registered base law don't worry about extended time limit. That is not the question. Okay, நம்ம வந்து இப்போ ஒரு examination questionல September the TDS has been paid in October, we will disallow 30%, though this year there is an extension. Okay, that extension is not based upon, I'll come to that provision, that is CBDT's power. Okay, that is only CBDT's power, but nama law prakaram 30th September, 31st July, like that only we will go. So, all trust, okay, should get themselves re-registered within 3 months from the date on which this clause comes into force. Make an application. That's what they are saying. Make an application and say that within 3 months you have to get it re-registered. Now I want to make you very clear. This provision is valid only for 1 year. You all understand, no? Because I am substituting a new section, all trust. For a student who is going to write in 21-22, that is after 22, after May 22, for a student who is writing in 22-23, this provision doesn't matter. ஏன்னா அவனை பொறுத்த வரைக்கும் this is over already. For people who are writing in May 21, this is a dynamic provision because they know that within 3 months or 6 months, etc., they need to get it re-registered within 3 months from the date on which this clause comes into effect. Where the trust or institution is registered under section 12AB. Okay, whereas trust or registration is registered under section 12AB. 12AB is valid for 12AB is valid for
5 years.
3 years or 5 years as the case may be. Okay, provisional na 3 years. Okay, idu vandu 5 years. Okay, and the set period of registration is due to expire at least 6 months before the expiry of that period. Make another application. So at the end of the 4.5 years, ensure that you make the application for continuing the registration. Okay, where the trust or institution has been provisionally registered. Okay, this is provisionally registered under 12AB at least 6 months prior to the registration, prior to the expiry of provisional registration, or within 6 months of commencement, whichever is earlier. Okay, whichever is earlier, apply for. So there is a provisional registration within 6 months from the date of activity or 6 months from the prior to the expiry. Please apply for re-registration. Where the registration of trust or institution has become inoperative due to the provisions of section 11.7, okay, due to the provisions of section, that is, you have been applying funds for a specific purpose, etc., non-specific purpose, 6 months prior to the date of commencement of the assessment year from which the said registration is okay. Now you want to carry out the activity. You already had a registration, but it becomes inoperative. Now again you can come back to life by applying within 6 months. Where the trust or institution has adopted for modification of object, okay, which do not conform with the condition within a period of 30 days from the date of adoption of modification, which is what I'm going to come now in the genuine position. In any other case, at least 1 month prior to the commencement of the previous year. So that's why you will see there 1 month, 6 months, 30 days, 3 months. Okay, all these things is because of the new law under section 12AB. The amendment, ஏன்னா நீங்க படிக்கும்போது you will get confused. Sir, என்ன சார் amendment in 12A அப்படின்னு சொல்றீங்கன்னு. Yeah, amendment is 12A to make you follow what is section 12AB. What is section 12AB? Okay, so the same amendments will also be there in 1023C. 1023C or the first paragraphs, that is what? When you need to apply for re-registration. Within 3 months, 6 months, sometimes 1 month, okay, of registration. Okay, I will continue this Excel sheet and write for you the time limits also. Okay, but as of now, I'm asking you to understand in the bare law, but I will continue in the Excel sheet. I have done all the questions also, my dear friends. Whatever has been missing, I have done all those questions also. Now you have it fully. Okay. So I will continue to do this also. I'm yet to post assessment of companies. The last two questions I'm yet to complete it. I will complete it and post it. So the time limits which I'm going to write and give it to you for my May 21, friends, I'm saying time limit will always be, in my small experience of looking at it, in the objective type question, these time limits might be asked. These time limits might be asked in the objective type question. I will clearly tell you with a table in our Excel sheet. I will put the table and give it to you. But please remember, time limits can be a question too. Can be a question too. So these are all the amendments. 1023C, 12A, 12AB, 11 Lenassar amendment பயந்துராதீங்க. Okay. We have already seen that audit mandatory dates அதெல்லாம் 11ல கொண்டு வந்துருவாங்க அந்த amendment, that sort of amendment. And wherever they are using the word 12A, no, now they have to use the word 12AB. So you will wonder why so much of amendment in 11, but have you not covered, sir? No, I have covered. Wherever they are using the word 12A, they have now used the word 12AB. Okay, for the words bracket 12A, the words figures 12AB has to be substituted. Okay, 1023C has to be substituted because for a section, when it goes out, another section comes. Wherever they have used that words, you will see those things. So that shouldn't be that. Don't think that 11 as an amendment. 11 is an amendment because of introducing 12AB. இதெல்லாம் நான் உங்களுக்கு சொல்ல 10A because உங்களுக்கு தெரியும் இந்த amendment. Okay, that is before the specified date or 44AB, because audit date and filing dates are different. They have to, wherever that is appearing, so these things has to come. That and all you can leave it, but this is a major amendment. So I will ensure that I will complete this time period later for you. Other administrative requirements. Okay, what are all the other administrative requirements of a trust? What are all the other administrative requirements of a trust? You have always allowed, please understand, the law has always allowed 15% set apart. We have all seen. Okay, 15% set apart. And there is a corpus donation which will not form part of income. Which will not form part of income. அது ஸ்பெசிஃபிக்கா இந்த ப்ரொவிஷன்லயும் சொல்லியிருக்காங்க. The new provisionலயும். Okay. The 1023C they have specifically mentioned, for the removal of doubts it is hereby clarified that for the purpose of provision, the income of fund or trust or university or educational institution or other shall not include in the form of voluntary contribution made with a specific that they shall form part of corpus of such fund. Okay, so corpus donations will not form part of income. You all know corpus donation will not form part of income. Number two, my dear friends, you all know 15% set apart. Can I use it in any manner? Can a trust use that money in any manner? Means no. Okay. Funds that are allowed to be accumulated needs to be invested as per need to be invested in approved modes only. This is said in section 11 subsection 5. In approved modes only, this is needs to be invested. Okay. Okay. I can copy it and put in our Excel sheet. Investment in government securities, post office, UTI, central or state government. Okay, these are all the approved investments. I have not seen a question. You can just say that it should be in approved modes. Okay, investment in approved modes is more than sufficient. These are all the approved modes. Okay, investment in government securities, deposit in any amount with post office, investment in units of UTI, any securities or money created by central or state government, financial corporations, deposit in bonds of public companies, immovable property investment, deposit. Okay, these are all the allowed modes. Funds that are allowed to be accumulated need to be invested in approved modes, which is said in section 11 subsection 5. Which is said in section 11 subsection 5. Funds that are accumulated. What is accumulated funds? Two things. One is 15% which you are setting apart, and corpus donations. These are the two things which are known as funds that are accumulated. Funds that are accumulated cannot be donated to any other fund, even if such fund is registered. Okay, you cannot donate out of the accumulated funds. I am repeating. Last class we saw, can I donate to another charitable trust? The answer is yes, provided it is not with the direction that it will form part of corpus of the trust. Provided it is not with that. So, what did that provision say? That provision said out of the income of the current year, you can donate it. This is restriction of accumulated funds being transferred, which is not allowed. Which is not allowed. Okay? Accumulated funds, that is that 15% and corpus. Corpus to corpus, not allowed, friends. Okay? So, only current year income, you can donate it to another trust. Accumulated funds cannot be donated to any other trust or institution, even though if the other institution is registered. Audit is mandatory if the income of the trust, audit is mandatory if the income of the trust before providing for exemption under section 11 or 12 exceeds the maximum amount not chargeable to tax. Audit is mandatory where the income of the trust before providing exemption under 11 or 12 exceeds 2,50,000. Exceeds 2,50,000. Irrespective of income, all trusts are liable to file their returns, tax returns, okay, under section 139 subsection 4. Irrespective of the level of income, all trusts are liable to file their tax returns under section 139 subsection 4. Okay, a trust will lose the benefit of exemption if return is not filed within due date. Remember, a trust, API and all we studied, a trust will lose the benefit of exemption if the return is not filed within due date. From which year exemption can be claimed? The next question I am answering is, from which year I can claim exemption? I will start with an example. Date of making application for grant of registration. Date of making application for grant of registration, 1st March 2020. CIT gives approval for registration. CIT gives approval for registration. My dear friends, Commissioner of Income Tax gives approval. So within 6 months they have to give. Let us take 12th September 2020, it is granted. 12th September 2020, it is granted. Any idea?
From 1920 itself.
That's good. Exemption can be claimed from the financial year 1920 itself, my dear friends. Exemption can be claimed from the financial year 1920. Okay? Law படிக்கும்போது this will be really confusing. Okay? From the assessment year relevant to the previous year. Okay, nothing but the year of application. You can easily understand it as from the year of application. Exemption can be claimed from the year of application. What is the answer? You made the application in 1st March, got the registration on 12th September 2020. Exemption can be applied, claimed from financial year 1920. Assessee is operating from 1819 or 1718. In 1819 also, the trust has the same object and has applied more than 85%. Can they claim exemption?
I
No,
think
sir.
no, sir.
No, sir.
No is the answer, my dear friends. No is the answer. Okay. ஒரே ஒரு relief, which is also good. However, if there are any pending assessments for any preceding years before grant of exemption. Okay, I think for this batch or for some batch I gave an explanation. What is the difference between previous year and preceding year? Previous year means 1920. Preceding year means before 1920. Law ODS startingly, income tax law starting itself explains that. Where in the case of individuals, residential status, 60 days in the previous year plus 365 days in the years preceding the 4 years preceding the previous year. Preceding year is different from previous year. Previous year means that financial year where we are going to levy tax. Preceding year means before that financial year. Previous year cannot be plural. Previous year can only be 1 year. Preceding year can also be plural. Preceding years, okay, is possible. However, if there are any pending assessment for any preceding years before grant of exemption, and now exemption is granted, AO, assessing officer, is satisfied that all conditions are fulfilled in such preceding years, then he shall drop all assessment proceedings. That is the only relief you can have. That is the only relief you can have. Okay, though we have already written it, it is there in section 13, denial of exemption. That is, the exemption will be withdrawn. Okay, we all know where it is not for the object. But for religious trust, this is applicable. Then it becomes a private trust. You are not supposed to from the accumulated funds. You are not supposed to give any donations. If you make a donation from accumulated funds, I will withdraw it. Yes, modification of object. Yes, modification of object of the trust requires re-registration. Can you answer this question? Legal or no?
I
Logical
think
answer.
that depends on the modification that they are trying to make.
Abdina, what do you mean by that actually?
Say, for example, I'm going to take up a new business object or non-charitable object or an object for which there is no general public utility. Say, I'm taking an object that is outside the ambit of a charitable trust
Okay, I'll
general
ask
object.
you the direct question. I'm an educational. I got approval for educational facility. Okay,
Okay. Okay.
I am starting a new class or a new course. Should I get the object? So does that amount to modification of object?
No, sir.
No, no. I'm also now starting an hospital.
I think yes.
So don't go into whether it is genuine, not genuine land. Modification, yes. Okay, even the modification can be within the corners of the law. Yes is the answer.
Okay.
Okay, where re-registration is not applied for, then trust is deemed to have been not registered. Because I gave it to you with a condition, with a looking into your trust deed for a specific purpose. Okay, so where re-registration is not applied for, then the trust is deemed to have been not registered. Modification warrant, mandatorily you have to re-register if there is a modification in the object of the trust. Five recent case laws, one a mandatory case law. Okay, I mean two landmark case laws. Where an institute engaged in imparting education incidentally makes profit, would it lead to an inference that it ceases to exist solely for educational purpose? Friends, I'm running a school. The object class has three things: exclusively for educational purpose, not for the purpose of making profit, educational facility for public at large. The object class has these things. Now, 3 continuous years I have made profit. 10 lakhs, 11 lakhs, 14 lakhs, like that I have made profit. The Commissioner of Income Tax now questions my genuinity, saying that you have been continuously making profit. You have been not just making profit 1 year, you have been continuously making profit. So I am cancelling the registration. You are no more can call yourself as non-profit organization. You are making. I am contending my profit is incidental. My profit is just incidental. And it is because that I was able to collect better fees, spend lesser, so I am having profit. So just because I am a non-profit organization, it does not mean I should not make profit. Is the commissioner correct in cancelling the registration?
No, sir.
No. Held by Supreme Court that all conditions were fulfilled by the assessee and the profit was only incidental, and such profit is also utilized for the main object of spreading education. Hence, it is satisfied the condition, so exemption cannot be denied. Queen's Educational Society. Queen's Educational Society. Okay, I accept with the court. Non-profit seeking is different from motive. இங்க motive இருக்கிற நிறைய institutionக்கே we are giving exemption. கோச்சுக்காதே சுபிக்ஷா. Okay, right? So the motive itself is to make profit and we are giving exemption. Profit cannot be the determining factor for exemption. Profit cannot be the determining. Okay? Unfortunately, the same thing was again held. இதெல்லாமும் education sir. Imparting education or training in specialized fields like communication, advertising, etc., and awarding diplomas and certificates. Can a private institution which imparts this education claim exemption or claim grant of registration and also claim exemption? Okay, the court has held yes. The term education is very wide. Don't restrict it to either school system, college system of education. St. Peter's Educational Society. There is no requirement for formalized manner to conduct educational courses. The institution is established with the purpose of imparting education. When it is clear that the funds are utilized, exemption cannot be. I have answered this question. Whether a charitable trust is deemed to be registered due to non-disposal of application within 6 months, the answer is yes. Promotion of education. In that case, it was held by the High Court. Okay, yes. Okay, society held by the High Court that where communication is not received within 6 months, okay, can be deemed to be registered. Society for Promotion of Education. Society for Promotion of Education. Yes is the answer. Society for Promotion of Education. When should the application be made for registration? When can I apply for registration, my dear friends? When can I apply for
6 months.
registration?
Anytime.
Huh?
Anytime after incorporating the trust.
Very good. Any time after incorporating. Within 1 month after incorporation, I am making an application. While making the application, I should have trust deed, audited financial statements, etc. Year is not yet over. I have time. So the commissioner says, no, I am not yet satisfied whether you are going to do the activity or not. So I am not giving that benefit. Is the commissioner correct? The answer is no. Okay. Meenakshi Ammal Endowment Fund. Application can be made anytime after incorporation. The requirement of financial statement arises only if the year is completed. Okay, you can immediately, all trust immediately apply also. All trust immediately apply also. So Meenakshi Ammal Endowment Trust, it can also be immediate. Court proceedings were taken on the will of a particular person. Investment or advance is paid. AO contended that there is clear violation and hence exemption is withdrawn. I'll tell you the case. Mr. X dies saying his deposit, his deposits and his property belongs to a particular trust. Very famous person, Raja Bahadur nu solittu, very famous person. He died giving everything to the trust. The trustees want to raise a memorial for Raja Bahadur, so they gave an advance for construction. They gave an advance for construction, and all the investments which that person Raja Bahadur had should come to the trust. இதுதான் சார் case. Meanwhile, the family members of Raja Bahadur filed a case saying that the will is not valid. Okay. unless the court probates, unless the court gives a judgment, I will not get the deposit or I cannot continue my activity. So in the trust books on the asset side, deposits are there, advance given for construction is there. Assessing officer சொன்னார், if it is a trust, it needs to be deposited. Investment should be made only as per section 11.5. Investment should be made as per section 11.5. Both this deposit and this advance is not mentioned in 11.5. I read out 11.5 for you. So, the exemption for you is withdrawn. The granted exemption, because you are violated. One of the things is, if you are violated, 13 says, if you are violated the 11.5 mode, you get the exemption can be withdrawn. So it is withdrawn. Is the assessing officer correct? Is the assessing officer correct? என்ன ஹரிஹரன்?
It's not correct, sir, because proceedings are there.
I understand. You are saying that he is not correct, but he has a point. That's what you are saying.
Yes, sir.
Yeah. Court also said that he is not completely wrong, but he is also not completely correct. The court said, unless the trust gets the fund, you cannot expect it to invest in 11.5. The person who died had deposited it, and he said that the deposit will henceforth belong to trust. And the not only deposit, he has invested in shares of foreign company and all, which he said, I am writing in the name of the trust. A trust cannot hold shares in the foreign. Indian company, a trust cannot hold shares. So, as we are going to talk about foreign companies. So, coming back, the question is, can the trust hold shares in foreign company? The answer is no. But unless I get the will to be implemented, எனக்கு will implement ஆனாதான் that funds, I can sell the shares, gets the fund and invest in specified modes. Okay? Unless the will is probated, because it is no more under our law. Okay? K-Tree Trust, a famous case. Twice the question has appeared. Validity of the will has been challenged in the probate proceeding. Therefore, till it is probated and affirmed to the trust, would not be acquired the legal right over the asset. Based upon the above factual finding, the High Court held there was no violation of section 11.5. Okay? Unless I get the money, I cannot have the right to use the money. So, before getting the money itself, the court had the will was questioned, challenged by in the court. So, என்னுடைய bookல it is an asset, no doubt, because he has written in my favor, it is there as an asset. But I cannot encash that asset unless the court gives a favorable judgment. So until then, even though it is not in prescribed mode, I will get it. K-Tree Trust. Cancellation of registration on the basis of search conducted in the premises of Secretary General and the statement recorded by him. Is this valid? இப்படி question கேட்டா உங்களுக்கு கஷ்டம், because unless I give you the facts of the case, Okay, but question இப்படிதான் வரும். Because you are supposed to know the facts of the case, I'll tell you the facts of the case. Mr. X, who is the prime person, we call him if it is a company CEO, general secretary if it is trust or is political parties, etc. That is the prime post. Okay, runs a trust, and all decisions pertaining to the trust are taken by him. The trust does not have an office. His house is the office from which the trust is being run. Or I think the trust had an office, but his house is the place where all decisions are taken. Okay. His house was raided. Search, seizure is technical word, colloquial way, raided, and his statement was recorded. How funds are transferred to the trust and how trust money is used. Based upon his statement and the raid conducted, the registration of the trust was cancelled by the commissioner. The trust filed a case saying he is after all a position holder. One secretary general is after all a position holder in my trust. His statement and searching his house cannot be the reason for cancelling my registration. Or trust or a person. We all know it's a person. Secretary General is an individual. The trust says in the individual on a statement basis, you cannot cancel. What you raided is this individual's house. You found some papers. This individual has said that the trust funds has been used, etc. Based upon that, you cannot cancel my registration. He is after all a position holder. Is the contention correct?
Seems to be correct. Other investigations.
Other industries are there. Okay, seems to be correct. Okay.
Unless that income is trust's income, it is correct, sir.
No, it is trust funds have been misutilized. Not that the Secretary General is giving about his personal things. Secretary General is saying that the trust funds has been used for this.
Then registration needs to be cancelled only, sir.
Should be cancelled. Okay. The court held உங்களுடைய எல்லா decisions-ஐயும் are taken by this secretary only. The court went through the minutes. All your decisions are taken by this. Okay. Board of trustees இருந்தாலும் one prime person only takes all the decisions. Majority of the trust, leave alone the 10 or 15% of the trust. But otherwise, all decisions are taken only by the prime person. Okay. So all the decisions are taken by General Secretary. Majority of the decisions are taken at his house only, though you have an office, but he still is operating from his house. Above all, as finally our friend has said, the General Secretary did not give details about his income. The General Secretary clearly mentioned that the trust funds has been used like this, etc. And he is the signatory of the trust. So all these things lead to the fact that the trust has not been properly operative. So registration cancellation is valid. The entire trust activities were conducted from Secretary General premises. Further, the statement provided by the Secretary General pertains to the operation of the trust, which has come under the scanner. Hence, the cancellation of registration as per Secretary General's statement is valid. last of the recent case law, nothing to do with income tax law though, this case law, okay, is approval of civil mandatory code for the amendment of trust deed, even in case where the settlor has given power to trustees to alter the trust deed. Okay, is it necessary? That is, normally a trust deed can be altered in two circumstances. One, the deed will specify, for example, majority of the trustees are accept, 3/4 of the trustees accept, unanimous consent. If the deed is silent, then any amendment, okay, will be only made by taking the permission of civil court. Here, the person who created the trust has given power to the trustees to alter the deed, and they have altered using that power. But now we are contending, நீ வந்து civil courtல போய் இதுக்கு permission வாங்கல. You haven't got the approval of the civil court. So I am denying the cancellation. Okay, not valid. Okay, where the settlor has given powers and mode by which trust deed can be amended, where all conditions laid down are followed and the deed is amended, then no further approval is required. Only when the settlor has not given the power, civil court intervention is mandatory. Ramoji Foundation. The number income tax law way illa, this is more to do with trust law. So these are all the 7, 1, 2, 3, 4, 5, 6, 7. 7 case laws which are of recent nature. Okay. Apart from that, there are 2 other case laws which are very important for you to understand. Okay. Right. First case law is like this. Please understand first case law. Gross receipts from, okay, students. Let us take 40 lakhs. Expenses for running the school. Let us take 30 lakhs. In the 15% set apart, is it 40 lakhs into 15%, or is it income of 10 lakhs into 15%? That is, 15% you all know it can be set apart. Is it 40 lakhs into 15% gross receipt? 15% of gross receipt of 15% of income.
Gross.
Gross
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 receipt.
receipt. Because several, in 11, unfortunately, they use the word income, but it has been clarified by the Supreme Court. Program for community. Should 15% be computed on the net income or gross receipt? Held by the Supreme Court that 15% would be eligible for accumulation of the gross receipts. This case law it will repeat again in when I teach you schedule 7, chapter 6a. Okay. 80G application 12AA interlinked. That is 85% is not applied by a trust. So they are denying the 80G application. Is it valid? The question is no. The purpose of 80G and section 11 are different. 80G is not in relation to computation of income. Further, non-fulfillment of condition by the trust cannot be ascertained by the donor while making the donation. Hence, the ground of rejection of donation is not acceptable.
Sir,
Yes, sir.
sir, ETG க்கு தனியா அப்ளிகேஷன் கொடுத்து வாங்குவாங்க சார். Like
ஆமா.
because okay fine.
ஆமாம் சார்.
Okay.
80G alone can be cancelled without cancelling 12AA also, sir. These two are landmark case laws, not recent. Okay. Whereas the other things are all recent case laws. Again, it will reach you in a good form. Don't worry. For a quick look at questions. Now that all questions you know the answer, I may type the answer even after our classes and post it. Question number 5. A charitable trust whose income can be exempt under section 11 was formed on 1st March 15. For the accounting year ended 31st March, it has earned an income of 360. It filed for registration on 30th March 2020. It filed on registration explaining that good and sufficient reason it was prevented from filing the application. By which date the registration application for registration should have been filed? Is there any limit? The answer is no. The answer is no. Previously, as I told you, previously the law was saying that it should be within 6 months, within 1 year, sorry, within 1 year after. Now, any time after incorporation, application can be made. Now, any time after incorporation, application can be made. Okay, there is no specific due date. In the material itself, you can write it here. There is no specific due date. Whether such an application could have been filed before formation of trust? No. After incorporation only you can. No is the answer. No. In the absence of an order of registration from the commissioner, can the trust be deemed to be registered society for promotion of education? Society for promotion of education. Within 6 months, if there is no 6 months from the end of the month in which application is made, if there is no communication, then you can deem it. The steps to be taken by the trust to secure exemption from income tax. Okay, mandatory write down, in a small manner write down, registration, mandatory audit, application of 85% of the receipts. Application of 85% of the receipts. Whether the certificate of registration once granted can be cancelled and the condition thereof. Okay, we have seen if it is private purpose, religious purpose, not for the purpose of object, not being genuine, not complying with other laws.
Excuse me, sir.
Yes, sir.
Sir, however, the religious trust will be found only for religious purpose.
Yeah, that is allowed, sir. Other than religious trust only, the general public utility, you cannot spend it for a particular religion.
Okay, sir.
Paper conditions, sir. Can a trust created for charitable purpose in April 19, having filed application on 11/4/20, claims the benefit for 11/12 from assessment year 2021. What is the date of filing application? What is the date of filing application for registration? Friends?
11/4/2020.
So, exemption is available from the financial year 2021. Exemption is available from the financial year 2021.
Assessment year 21-22.
Yeah, assessment year 21-22. They cannot claim the exemption for assessment year 2021. You have filed it only on 11/4, only from the year in which the application is filed, your grant of registration is acceptable. So, for financial year 2021, nothing but assessment year 21-22 you can claim. You cannot claim for assessment year 2020.
Sir, but if the assessment proceedings are pending, like அப்படின்னா வரும்ல sir.
Yeah, you can add on that answer, but the question is not about that.
Okay.
The question is not about assessment proceedings. The question is directly about income, but you can add an add-on answer. Not a problem.
Okay.
Next question, one more. Help All, a trust created on 1st January 2020 for providing relief for the poor, applied for registration on 1st March 2020. On that date, its corpus fund comprises only of the initial contribution made by the trustees. That commissioner denied registration solely on the ground that the trust has not yet commenced the activity, due to which he could not satisfy himself about the genuineness of the trust. Is the ground of denial valid?
Not valid.
Meenakshi Ammal Endowment Trust. Meenakshi Ammal Endowment Trust. Okay, it is not valid. You have anyhow the power to revoke it later, but the time period is just 2 months, shorter time period. You cannot reject the application. Ramji Travis Charitable Trust has filed a return of income for AY 2021 within the stipulated time and apply only 50% of its income for specified purpose. It intends to accumulate the balance 35% of the income to be spent in future years. While completing the assessment, the AO disallowed the accumulated 35% and taxed the same on the ground that the trust has not made any application under section 11(2) along with the return of income. Discuss the validity of the action of the assessing officer. What is 11(2)?
Conditional accumulation.
Conditional accumulation. Okay, please write down the answer. I will ensure that I write down it in the same order of questions. Okay, please write down the answer. The action of the assessing officer is correct. The action of the assessing officer is correct. Where assessee intends to conditionally accumulate the fund. Where assessee intends to conditionally accumulate the funds. He has to present an application specifying the purpose. He has to present an application specifying the purpose and the period of accumulation. Where such application is not made, procedural compliance the law சொல்லுவாங்க. Where such application is not made, AO has the power to revoke the application. Sorry, to tax the income. I'll come to 9th question. Friends, 18th question வந்து 2011-12 ஓட கேஸ் லா. இப்போ அது அந்த கேஸ்லாவே validity is question. I'll read the question. All others are answered. 18th question. A charitable institution registered under 12A filed Form 10, that is the 11(2) application, for seeking permission to accumulate unapplied income of under section 11(2) for the object of the institution. Okay, what purpose? For the object of the institution I later applied and submitted it to the assessing officer along with the resolution. The AO found that the object for which accumulation was sought were not particularized in as much as they cover the entire range of objects of the institution. Can the AO deny the benefit? The answer should be yes. But in that year, there was a case law which said that no, the object of the trust specification is enough. But actually, when I read the law, when I am very going detailed, they should state practically also what purpose of the capital purpose for which you are accumulating. Okay, and just saying that I am accumulating for the object of the trust, everything is for the object of the trust only, is not applicable. But in that year there was a case law which allowed it. No more it is applicable. Okay, you will find the answer in the Excel sheet, but please don't give so much importance. I think the object should be there. In the examination question, I have answered this yoga question also. Okay. இது வந்து நம்ம இப்ப படிச்ச கேஸ்ல கோவிந்த் charitable trust. Okay, a denial of exemption. The trust applied for approval under 80G. The application was rejected on the ground that 85% of the income is not for charitable purpose. That year it was a dynamic case law. Now it becomes a landmark case law. Okay, now it becomes a landmark case law. So this Govind Bai. Okay, but this is also there in our deductions chapter. This Holy Mission is again the same 80G. Okay, Holy Mission is again the same 80G. Okay, denial of 80G. Okay, so those are all the things about trust. Those are all the things about trust. One sure short question from trust, never to be missed. Never to be missed, my dear friends. We take a short break and come back to do taxation of political parties. assessment of political party. Assessment of political party. Party should be registered with the People Representation Act. Party should be registered with People Representation Act. The Election Commission should recognize the party. So it should be a registered and recognized party. It should be registered under the People Representation Act. Election Commission recognizes it if they get a percentage of votes, 2% or more. If they get a percentage of votes, they will allot a symbol and recognize the party. So there are two fulfillment: party registered and it is recognized. The following incomes are exempt. The following incomes are exempt. Income from property. The word property can be anything. Income from property is exempt. Voluntary contribution received. However, contribution in excess of rupees 2000 received otherwise than by account payee, check, draft, banking channels, okay, contribution in excess of rupees 2000 received otherwise by these modes will not qualify for exemption. Normally, all voluntary contributions are exempt. But if you receive the contribution in cash in excess of rupees 2000, then it will not qualify for exemption. Even if you are offered a lifetime fees, please don't do a political party audit. Riskukala na sollala. You will lose all confidence in this world. You will lose all confidence in people. Even if you are given a lifetime fees, your life gets settled, but peace will be completely lost. சொந்த அனுபவத்துல பேசுறேன். Okay, never do political party audit alone, because you will blood will come out of your eyes. If you are of that nature, I believe all of us are this nature. Leave alone these auditors who do everything for money. We are not of such caliber or kind. Okay. The less than 2000, 1500 rupees cash receipt, if you add all political parties cash receipt and divide it by 2000, up to 2000 only you can get the cash receipt. Okay, if you add all political parties cash receipt and divide it by 2000, it will be 5 times of the population of India. I'm not joking. It will be 5 times the population of India. India's top 10 companies உடைய turnover, India's top 2 political party ஓட income same na, will you believe? 2250 crores. Voluntary receipt na, do you believe? 2250 lakhs இல்ல, thousandsல நான் பேசல. Balance sheet is presented in crores. ஏதோ எனக்கு மாத்திரம் இல்ல, நீங்க if you go to the election commissioner site and download, it's a public document. 2250 crores is the receipt. ஒரு கம்பெனி, இந்தியாவோட டாப் கம்பெனிஸ் எடுத்துட்டீங்கன்னா அந்த டர்ன் ஓவர் இருக்காது. தயவு செஞ்சு அந்த ஆடிட்க்கு மாத்திரம் போயிடாது. ஓகே, மை பர்சனல் விஷ் இஸ் தட் ஐ have stopped following politics, completely stopped following politics, because it kills our peace like anything. No shades attached. Okay, and neither I'm a perfect follower of Dr. Manmohan Singh once upon a time. I'm a big fan of Advani also. Okay, so and it coexisted in me. Okay, otherwise politics gives me lot of blood pressure. அதுல வெளில வந்த அப்புறம் தான் நான் கொஞ்சம் நிம்மதியா இருக்கேன். Trust me, நீங்க நினைக்கிற எல்லா பொலிட்டிக்கல் பார்ட்டிலையும் நான் அசோசியேட் ஆயிட்டேன் ஏதாவது ஒரு விதத்துல, some consultancy or part of it. Okay, after all these experiences only I am telling you, தயவு செஞ்சு அந்த பக்கமே போயிடாதீங்க. So income from property, தலைவர் வந்தா போலாம், அதை மிஸ் பண்ணாதீங்க. வரமாட்டார், நம்பிக்கை இருக்கு எனக்கு. முதல் நாள்ல நான் சொல்லிட்டு இருக்கேன், முதல் நாள்னா நீங்க இப்ப இல்ல சார், 2001-2ல somebody asked me, I said he will not come. He will not come. He is not a political product at all. He has no associate. He is a showman and he has to be a showman. Okay, even on 31st December 2016 or 17, he announced that he is going to come. On that day also, I was doing a play that day, and I said openly he will not come. It is only just he is saying that he will come. He will not come because he is not of that caliber at all. I'm not giving a vouching that, oh, he is such kind of person. Anna, he is not a political. Politics ke adu otte varad. His character, his type of nature will not suit politics. Okay, I have been in close quarters with many politicians. Okay, to the most honest also I have been very close quarters. Okay, but I know that he is not that man. He will not fit in any of these people's caliber. Okay, nice to, because of my fanism, I can celebrate him. Because of my loyalty, I can vote for him, but that cannot be turned out to be everyone doing that. Okay, so just telling you. So voluntary contributions in excess of 2000. All other things, all other incomes are exempt. Income from, okay. The following income will be taxable. business income, even if it is incidental. Business income, even if it is incidental. பெரிய கேஸ்லாம் நடந்தது. Okay, every political party runs a magazine. You all know magazine, newspaper, etc. Then they said that is business. So now they got segregated that into a different entity, either as a trust or as a company, which you all know now. Okay. Okay, business income, even if it is incidental, it becomes taxable. Capital gains, provided the whole of the net consideration is not reinvested. It becomes taxable. You know, a political party is not supposed to receive foreign contribution. Express restriction under both People Representation Act and under income tax law. You cannot receive foreign, under FCI. You cannot receive political party because then they will start dictating terms. But if you take the top political parties' financials, you will be shocked. Okay. Nineteenth question. The books of accounts of a Makkal Katchi, a national political party registered with the Election Commission for the year ended, discloses the following: rent of let out property to a departmental store, interest on deposit. These are property income, which will get the full exemption. Okay, cash contribution from 100% of rupees 3,000 each will become taxable. Contribution by check will not become taxable. Net profit from a cafeteria run at Chennai, it will become taxable. Compute the total income. The one solution is there. One minute. Sorry. 1 minute. There is a problem for someone. rates. So a political party is taxable at slab rates. The same thing for a electoral trust also. The same benefits, the same provisions hold good for electoral trust also. The same provisions like political party, the same provisions will hold good for electoral trust also. So these are all the things which you should know in chapter for trust and political parties. Please remember there is one sure short question. Okay, it can be from 115 TD, etc. Okay, but be sure there is a question from a political party. I think there is a small amendment. I think. Okay, 115 TD also 12 AB substitution only. Okay, only 12 AB substitution instead of 12 AA. There is no other amendment in 115 TD also, friends. I'll start with a new topic. I will later frame the Excel sheets, etc. But I will start with the topic now. Yeah, you
Sir.
have a question, you can ask me. Yeah.
சார் கேபிட்டல் கெயின்ஸில் அந்த ரவுட் இருக்குது சார்.
Yeah, கேளுங்க.
நம்ம இப்போ ட்ரஸ்ட்டுக்கு வந்து கேபிட்டல் கெயின்ஸ் நெட் இன்வெஸ்ட்மெண்ட் நெட் கன்சிடரேஷன் பண்ணணும். பண்ணலன்னா வந்துட்டு காஸ்ட் மைனஸ் பண்ணுவோம்ல,
Yes.
அந்த மாதிரி அது இன்வெஸ்ட்மெண்ட் மைனஸ் காஸ்ட் அதே மாதிரி தான் பொலிட்டிக்கல்
Yes,
பார்ட்டிக்குமா?
yes.
ஓகே ஓகே சார். ஏன்னா அதில் வந்து காஸ்ட் வந்து யூட்டிலைசேஷனாக எக்ஸம்டாக இருக்கும். இதில் எப்படி சார்? இதில் அந்த மாதிரி கிடையாது.
இதுல இன்கம் வந்து fully exempt ஆயிருக்கும்.
ஓகே.
You would have got that from the income, so it would have got fully exempted.
ஓகே ஓகே சார், அண்டர்ஸ்டுட்.
Business restructuring. Business restructuring is the chapter name, my dear friends. Business restructuring is the chapter name. Okay. What are all the things dealt with in business restructuring are amalgamation, demerger, slump sales, conversion of entities. In this, we have seen these two already. While doing capital gains. And also while doing assessment of firm assessment of companies, we saw conversion of entities. So our focus is only going to be on amalgamation and demerger. Amalgamation more theoretical, demerger as a practical arena also. But first and foremost, amalgamation. First and foremost, amalgamation. The definition is the same as like in any other law. The definition is the same as like any other law. Okay, two companies joining together to form a new company, or one company takes over the other. Okay, the company or companies that go out of existence is known as transferor company, and the company which is going to continue is known as transferee company. Okay, so the same definition holds good everywhere. The same definition holds good everywhere. Now, as usual, let us go chapter wise and try to understand. Let us go chapter wise and try to understand. The initial chapter has the definition which I have written. That is the only thing. There is nothing to do with the residential status chapter on amalgamation. Okay. There is no specific exemption on amalgamation in which is applicable in section 10. Salaries chapter does not have anything to do with amalgamation. So is house property chapter. So to start with, if I go to profit and gains of business or profession. In this chapter, what are all the things we know or we should remember which applies to amalgamation? The first is depreciation. Proportionate depreciation needs to be computed. We all know that it is on the basis of period of effective usage. We have seen that it is on the basis of period of effective usage. Okay, refer to two examples in PGBP depreciation working. I think it's example 10 and 11. I'll check the numbers and we have seen. In one question we know amalgamation happened on 1st December, but the assets were started used from 1st March. Amalgamation happened on first. So what did we do? We just took the number of days as up to November. Okay, April to October 31st. Okay, somewhere around 210 days plus 31 days of, so the total number of effective usage we reduced and computed. Okay, you can recollect that question. So proportionate depreciation needs to be computed is the first thing that comes in amalgamation. The next thing which we all by heart know, that transferee company can record the value of assets as it is prevailing in the books of transferor. Okay, revaluation needs to be ignored. Okay, right? So this is another provision which we saw about cost of addition of assets, which also we know, not only in the subsequent chapters also. Then if I come to section 35, okay, amalgamation / demerger expenses will be allowed in 5 equal installments from the year of event. Okay, amalgamation demerger expenses will be allowed in 5 equal installments from the year in which the event happens, which also we know to an extent. Amalgamation demerger expenses, that is a standalone provision in section 35DD. This is section 35DD. Okay. Then if I travel to 36 or 37 or 40 or 41, 41 says, okay, any expenses or losses or allowances provided by the predecessor recovered by the successor or returned back by successor will be treated as income for transferee, who is the successor. Okay, so anything which has been bad debts recovered, bad debts was written off by the transferor company, recovered by the transferee company. Scientific research asset was used by the transferor company, now it is sold by the transferee company. Goods were purchased by the transferor, the creditors, assets and liabilities are taken over. Now the transferee company writes it off, writes it back. All these are known as deemed income. All these are known as deemed income. Okay, section 41. Section 42 does not have any provision. Section 43 is this particular case. Asset valuation, what would cost it can be taken. Okay, section 44 does not have an administrative aspect. Okay, but we all know one parent legislation which we have by hearted again and again, which I want to again reiterate. Okay, for all other provisions, the general statement is provisions will apply to the transferee company as it would have applied to transferor company as if amalgamation does not take place. We all know this is a general statement. As if amalgamation has not happened, the provisions will apply to the transferee company. Capital gain has two specific provisions: transfer of assets in a scheme of amalgamation will not be regarded as transfer and no capital gain arises. This is the first provision. Allotment of shares by transferee company to the members of transferor company is not regarded as transfer. Okay, allotment of shares by the transferee company to the shareholders, to the members of transferor company, which we are seeing, is not transfer. I also asked you to remember a particular provision. Okay, an asset in the books of transferor converted into stock in trade by transferee will fall under conversion of asset into stock in trade. Okay, look for this particular question, my dear friends, called, okay, Kanti Limited, Pancha Sanya Limited. look for this particular question which we have worked out, where we would have ignored a revaluation, some 3,20,000 in the books of the transferor company, which is revalued and taken over at 32 lakhs. We will okay. And on the date of takeover, it becomes in 2016 also, it was 36 lakhs, and that will become the fair market value, full value of consideration. Later sold for 46 lakhs after development, because the transferee company is also in real estate. So we have worked out a question like that. Okay, just look through that question. You will understand how to treat this. Nothing, same provision, but that case becomes more dynamic when it is transferred in a scheme of amalgamation. Previous company, transferor company holding it as asset, transferee company taking it as stock in trade. IFOS does not have any specific provision with regard to amalgamation. IFOS does not have any specific provision. Similarly, clubbing does not have any specific provision that comes and hits at section 72A, set off and carry forward of loss of transferor company. Set off and carry forward of loss of transferor company. This is the only question with regard to amalgamation. This is the only question with regard to amalgamation. As I told you, amalgamation can only be a theoretical part. Okay? The question is, can the loss of the transferor company be carried forward by the transferee company? Can the loss of transferor company be carried forward by the transferee company and set off? என்ன சொல்றீங்க friends? Can the loss be carried forward? Do you know?
Yes, sir.
51% of ownership needs to be there.
Okay.
I like that conditions are there to
Yeah,
be transferred.
very good. Okay. That's what you are all saying. Yes, provided the conditions are fulfilled. That's the answer also. Yes, provided the conditions are fulfilled. Make the conditions in such a manner that it cannot be fulfilled. So no will come. Yes, provided conditions are fulfilled. The conditions are going to be literally difficult. First thing I want this class to understand, it should be a industrial undertaking involving manufacturing or production. Service sector amalgamate ஆக முடியாது for loss. Please understand that it should be an industrial undertaking involved in manufacture or production. However, provisions are also applicable for banking companies and airline sector. Only two service sector provisions are also applicable for banking companies. All subsidiaries of State Bank of India amalgamated with State Bank of India. That time they brought this provision. And airline sector, Indian Airlines and Air India merge together. I wrote this. Air India by itself, they are unable to set off the loss of their own loss. The merged losses set off. But at that time, I never thought that a situation will come where Air India will be the only flight available for people. Okay. So now this year, I think Air India can easily set off their past period losses. Okay. Right. Coming back. It should be an industrial undertaking. So first you have a sword hanging over your head. So two courier companies, Professional Courier and DHL Courier, can they amalgamate? They can amalgamate. Can they set off losses? That is the transfer of losses. The answer is no, sir. It is not an industrial undertaking. To amalgamate and carry forward and set off of losses of the transferee company, it should be an industrial undertaking. Personal experience again. Okay. India is one of the biggest HR organizations. They had a lot of subsidiary organizations. Okay. For a couple of subsidiaries, when I was in practice, I was the auditor for them. Not even when before they got sold to a foreign company, I was the auditor for their subsidiaries. So they got sold and the foreign company took over, and the foreign company took over the subsidiaries also. Trust me, nowhere I'm exaggerating. All those people are very close to me. So the CEO of the company just called me, okay, and asked, Watson, I want to set off the loss. I want to take this companies, all these subsidiary companies into one company. Can I set off the losses of the subsidiary? 3 subsidiaries were making loss. I said, sir, you are not an industrial undertaking, sir. This provision is not applicable for you. You cannot. Call ended, sir. That's all. Call ended, sir. Okay. Or 9 months, 10 months later, I just casually met him in a wedding, sir. Okay, one of that company's people, their daughter is getting married. So I also went, he also, and he waved hands from me and called me, and he said, Watson, what you told is correct. It cannot be taken on. I said, yes, sir. No, we appointed an agency for this to know how the losses can be taken over and set off. The agency gave a report some 2 weeks back where they said that the losses cannot be set off. That is the time I realized the value of free advices is never taken. Not that I will not give that advice, but I was laughing at him. Yes, sir, நான் ஃபோன்ல 2 நிமிஷத்துல சொன்னேன் உங்கள்கிட்ட கரையாள் சார். இதுக்காக ஒரு ஏஜென்சி வச்சு 6 மாசம் என்ன சார் ஸ்டடி பண்ணீங்க? வாட் டிட் யூ ஸ்டடி? The first line சார் இன்கம் டாக்ஸ் லால 72A ஓட எடுத்து பாத்தீங்கன்னா it should be an industrial undertaking. However, for banking companies and airline sector and ONGC and the sector, they are giving some benefit. ONGC is over long, but otherwise it should be. This is the first line. What else was there for you to study in this? First line, book முடிச்சிட்டு நீங்க சொல்லிரணும் that you should not amalgamate. Okay, so why I am saying is because plain yes looks great, but it is not plain yes. Okay, if it is plain, you also understand the intention. If it is plain yes, it will become all the more cumbersome. Everybody will start absorbing another company just for the purpose of losses. Okay, so that will become more cumbersome. That's why it is not a plain yes. Conditions to be fulfilled by transferor company. Conditions to be fulfilled by transferor company. Losses should be accumulated for more than 1 year. ஒரே ஒரு வருஷம் loss you cannot carry forward. Losses should be an accumulated loss of more than 1 year. at least 75% of the plant and machinery. You know, the industrial undertaking. One more condition where it is very clear. Okay, should be held for a minimum period of 3 years. So, at least 75% of the plant and machinery should be held for a minimum period of 3 years. Okay, it should not be new. It should be an old plant and machinery. At least, so small change நீங்க சொன்னதுல 75% of the shareholders should become shareholders of transferee company. Okay, 75%, not 51, sir. 75% of the shareholders. Nama amalgamation in the nature of merger la 90%, if I am right. Okay, 90% of the shareholders of the transferor company should become the shareholders. But income tax law, you know, the same condition of amalgamation in the nature of merger is followed. All assets, liabilities taken over, all these things. Okay, so it should be conditions to be fulfilled by transferee company.
Sir?
Sir?
Sir, 75% of shareholders means, say there are 4 shareholders. 3 shareholders should become a member of the transferee company, or 3 shareholders should hold 75%. Sir.
No, sir. 3 shareholders and not the share capital. Sir.
Okay. Okay.
Okay. ஒரு ஃபார்முலாவே இருக்கு. If suppose transferee company is also a member of the transferor company, then you should reduce it and compute 75%.
Okay. Okay, sir.
Conditions to be fulfilled by the transferee company. At least 75% of the plant and machinery taken over should be held for a minimum period of 5 years. I think it will go to scrap, sir. Already in that company, it is 3 years plus. I should hold it for some, it will fall into pieces. Okay, but that is a condition. At least 75% should be held for minimum 5 years. Business of transferor should be continued by transferee. Okay, business should be, இப்படின்னா நீங்க ஈஸியா கண்டினியூ பண்ணுவீங்க. அதையும் நான் I will have a restriction. At least 50% of installed capacity should be utilized. Which 50% of installed capacity should be utilized. எதுக்கு? 3 years old machine. Obviously, so many conditions. You want an honest person to certify this. Okay? A chartered accountant certificate. Should be obtained for fulfillment of all conditions. If all these 6 conditions, 3 for transferor, 3 for transferee, if all these 6 conditions, if all the above conditions are satisfied, loss of transferee company, transfer also, can be carried forward by transferee company and set off in 8 years from the year of amalgamation. That is the only benefit you get. That is the only benefit you get. If all these conditions are satisfied, then you can carry forward for 8 years from the year of amalgamation. Even if one condition not satisfied, gone, sir. You will,
Sir,
you
these,
will reverse the loss. You will reverse the loss.
sir, these conditions will also apply for unabsorbed depreciation, sir.
Yes, sir.
Even unabsorbed depreciation can be carried forward only for 8 years.
No, sir. Unabsorbed depreciation is not falling under business law 72, but
Okay.
these conditions are applicable.
Okay, fine.
Okay. Okay.
Sir, every year of setup, I should check for this conditions.
Every year. That's what. For next 5 years, you should check off. And if you are not violating even one condition, if you have already absorbed, it will be reversed. I will come to that in the next class. I'll continue in the next class, friends. I will continue.
Sir, one doubt, sir.
Yeah.
சார் இப்போ 5 இயர்ஸ்க்கு யூஸ் பண்ணணும்னு சொல்றோம் சார். அது ஸ்கிராப்பிங் கண்டிஷன்ல இருந்தாலும் அப்படியே நம்ம ஐடலா வச்சிருந்தா we can claim that limit.
Sir, இங்க ஒரு இது இருக்குல்ல சார், 50% of installed capacity should be used னு.
Okay.
So அங்க அதுக்கு ஒரு செக் பாயிண்ட் சார். Meet you in the next class. All the best.